I might be getting ready to make the biggest mistake in all of my time in crypto. And it has a lot to do with this bear market that we're in right now. And I really want to know your thoughts about everything that I'm about to say in this video, including the data, including the timing of this bear market and where the bear market low is, and including my approach right now to crypto accumulation. Please hit that like, hit that subscribe, and let's jump into this and let me talk about what could potentially be, everybody, my biggest mistake in crypto. I want to start by kind of laying some groundwork here. My approach to crypto, if you've seen some of my videos, is based on one very simple concept. That is, expect nothing, anticipate everything. So don't predict, and especially don't make decisions based on predictions and emotions, but get ready for things. Anticipate every single scenario. That's why we always look at crazy targets to the upside and crazy targets to the downside on any given day. The structure of these markets allows for these targets to set up, and with those targets to the upside and to the downside and the unknown of those things, at any given moment, I ask myself, well, with all of these potential situations, am I comfortable with my portfolio? And if the answer is yes, then I'm cool. If the answer is no, then I dig into why that is, oftentimes needing to dig into the data to make sure that I'm making sound decisions. Which leads me to potentially my biggest mistake that I've ever made in crypto, right now, not accumulating more. And it's because I look at the data and I'm seeing certain things in terms of this bear market formation. If you've been watching my channel for any amount of time, you might have seen me track this app called Trueflation, which gives an on-chain Oracle data standpoint or perspective on true inflation numbers. For months, we've been tracking that as a leading indicator for actual CPI data that has been released. Check this clip out from September. This could be big. This could be on the long term really good for Bitcoin, for equity markets, for everything going on right now. Because we know that back here in March on Trueflation, and this is taking Oracle data to give us these numbers, you can see inflation, according to this data, topped out higher than what we're seeing the CPI data come in with over here. So even in September, Trueflation acting as a leading indicator for actual CPI data that was getting released. And we know when we look at the numbers, the Trueflation app actually topped out in March in terms of inflation. The CPI data that's been given to us topped out in June at 9.1%. So this is where we really started to see the Trueflation app acting as a leading indicator by around a few months. As Trueflation app was consistently falling, so was CPI data. In July, we saw 8.5%, August 8.3%, September 8.2%, October 7.7%, November 7.1%, December will be available January 12th. As of today, as I record this video, you can see Trueflation sitting below 6%. The trend down is continuing. For me, this means that the macro shift in terms of leveling out inflation and cooling things back down and getting this economy turned around has truly started. And this is a huge ship to turn around, so it's going to take some time for the economy to climb out of this mess. But needless to say, we are slowly getting there. And this data point, Trueflation app as a tool, has really helped us anticipate this. But with all of that said, there are still a lot of things happening in terms of on-chain metrics, signaling capitulation, and the bottoming out of crypto. And there's also data on the charts, not only crypto, but also traditional stock market charts like the S&P 500 that suggests that there's one more leg down. And this is what could potentially lead to the biggest mistake that I've ever made in crypto, namely waiting for that one more leg down. Right now, before I break down some data, comment below, do you think waiting for one more leg down is a bad decision? Do you think that timing the market is a very bad decision? And how are you approaching markets right now in crypto? Let's dive into this data and look at just a couple things. Right now, the S&P 500 target to the downside still has around 20%, and this would be a very commonplace move for the S&P 500. Bitcoin itself is only sitting 3% under its macro 786 indicator, which is this cycle indicator that I've used on this channel for years, that Bitcoin has bottomed below in its bear market retracement before. So Bitcoin still has a target of around 33% to the downside. And if history truly repeated itself and Bitcoin did the most commonplace move that it could possibly do, that 33% move to the downside would happen for Bitcoin to end this bear market cycle. And with all of this data coming together, charting data, on-chain metrics, inflation data, as we go into 2023, I see the potential for one more leg down before this huge ship starts really turning around and the economy starts really digging itself out of the mess that it has fallen within. So I find myself in a very ironic position because two things are happening. Number one, I am kind of timing the market in a sense of accumulation in this bear market with this anticipation that there could be a very strong leg down to end the bear cycle. And number two, if it doesn't happen, this could probably be the worst decision that I've ever made in crypto. If crypto has bottomed already and I'm still waiting for a last leg down, that would be a bummer. And this is where the irony lies. If this happened and we bottomed and I'm sitting here waiting for one more low to accumulate more heavily and I never get that opportunity, it could very well be the worst mistake that I've ever made in crypto. But at the same time, I'm okay with it. And this leads me all the way back to the original principle of my approach to these markets. Expect nothing, anticipate everything. I realize in anticipation that there very well could be another lower low, in which case I will tackle that opportunity with urgency. But at the same time I'm anticipating that, I realize that the low could have already been put in and I might miss a strong opportunity right now in this moment. But with these two contrasting situations, I sit here in this chair in my office and I'm okay with it. Meaning if we go lower, I will gladly tackle that opportunity. But if we don't, I sit here pretty comfortable with my portfolio right now, and I'm ready for a bull market if all of a sudden it happened out of nowhere. But regardless, if there's a new low or we've already put in the low, I think the bear market range that we trade within in the bottom will likely go on for a few months, and there's always going to be opportunity even if we trade sideways. And that's something else that I'm also considering. So let me know your thoughts in the comments below. This is kind of where I am and how I'm navigating this crypto bear market. How are you navigating the bear market? I appreciate all of you out there. Hit the like, hit the subscribe. I'll see you in the next video. God bless.